Now I'm going to get into breaker blocks and banker blocks. Essentially, a breaker block, you may see this a lot, especially for Andreas if you're watching a lot of ICT stuff. And so I'll break this down and I'll kind of break down my perspective of it. Breaker blocks. What are breaker blocks? Breaker blocks are going to be another representation of continuation order blocks. Although they are part of this group, they are a bit more advanced. Why are breaker blocks important? Breaker blocks are important because they are another form of continuation order blocks that you need to keep an eye out for. Although they are important to keep in mind, they are not needed to trade. You can get by just fine using the concepts of continuation order blocks alone. How to spot banker blocks. Bullish structure, bullish breaker structure. In bullish structure or bullish breaker structure, the breaker block is an order block at the previous structure high. The order block can be any type that you see fits. So the breaker block is an order block at the previous structure high. The order block can be any type that you see fits. So this, and actually I shouldn't draw this just yet. It should be more like this maybe. This is a low to high. What is the previous high? This one is. It's going to be the order block at the previous structure high. Any order block you see fits. That is what is considered a breaker block. Does that one make sense so far?
Yes.
Andreas, Nas, y'all good?
Yeah.
Okay.
Yeah.
Gotta run, Ray, but man, great live stream, brother. I'll catch up with you later.
Go for it, my man. You're all good. So bullish breaker structure. We have a high to a low price break structure here. The breaker block will come from the previous high, which is here. It is an order block at the previous high. Any order block you see fits. By chance, Andres, have you seen this done before?
No, I haven't.
No? Okay. I'm sure you'll come across it. Bearish structure, bearish breakup structure. And bearish structure or bearish breakup structure, the breaker block is the order block at the previous structure low. This order block must have a fair value gap resting right below it. The order block can be any type that you see fits. I don't think it has to have an order block or a fair value gap. I don't write it in these ones. I would still consider a fair value gap. I don't really use these. That's why I really haven't. I kind of wrote this and kind of left it alone. But for now, I will consider, yes, just like any other order block, it should have a fair value gap above or below it. So in this case, it should have one above. This one should be below it. So I'll add that as well. Bearish structure. Bearish structure, we have a high to a low. The breaker block will come from the previous low, which is this one. Any order block that you see fits. Bearish breakup structure, we have a low to a high price break structure. The breaker block will come from the previous low, any type that you see fits. Accumulation, reaccumulation. In accumulation or reaccumulation, the breaker block is an order block at the previous range high that caused the sell side liquidity sweep. The order block can be any type that you see fits. This area is what swept sell side liquidity at the previous range high that caused the sell side liquidity sweep. So this is the previous range high that caused the sell side liquidity sweep. Choose an order block that you see fits, and that is the breaker block. In distribution or redistribution, the breaker block is an order block at the previous range low that caused the buy side liquidity sweep. The order block can be any type that you see fits. Same thing but flipped. This caused the buy side liquidity sweep before price dropped. This is the low of the range as well. The breaker block will come from here. Make sense?
Yeah.
Yeah.
Examples of breaker blocks on the charts. Bullish structure, bullish breakup structure. So this is bullish structure. This is a low to high. Previous high is here. There is an order block here. So this is the breaker block. Bullish breakup structure. You have a high to a low. Price makes a new high. Breakup structure. The breaker block comes from the previous high. Order block. Any type that you see fits. Bearish structure, bearish breakup structure. In the examples of bearish structure or bearish breakup structure, the breaker block is the order block at the previous structure low. The breaker block is represented as a bullish engulfing order block in both examples. So I don't really have to read that, I guess. But bearish structure, we got this high to this low. Previous low is here. This order block is the breaker block. Bearish breakup structure, we have a low to a high. Price makes a new low. Breaker block comes from the previous low. And this bullish order block pretty much is the breaker block. And then accumulation. Technically, I should have a wick down here, which I don't. So technically, there should be a wick down here because this will be the sell side liquidity sweep. And then this bearish order block is the breaker block. So I have to fix that. Same thing here. Price should be sweeping buy side liquidity and then dropping. This bullish order block is the breaker block. Make sense so far?
Yeah.
So once again, this concept is not needed. So I don't want you guys to get too confused. I thought maybe Andreas would have not have seen this already. But if you see it, this is what they're doing. This is the closest thing SMC will do to break and retest. The closest thing to it, but as I explained right now, it technically, even though it looks like a break and retest, it really isn't when you really understand from an order perspective. But this is what this is. Breaker blocks from a bank perspective. Bullish structure, bearish breakup structure. In bullish structure or bullish breakup structure, the breaker block is the beginning / top of the sell to buy order block. This is a representation of where the banks began to dump sell orders into the market to take out internal sell side liquidity before buying and creating a new structure high. After making a new structure high, the banks can drive price down to the breaker block to mitigate the positions they have in this area. Remember, price does not have to stop exactly at the breaker block before creating a new structure high. This is just a potential area. Price can still drive lower and stay within the bullish structures range before creating a new structure high. So pretty much what I'm saying here, as you guys already know, the banks sold here before they bought. So therefore, this is a sell to buy order block. All the banker block, the breaker block is doing is showing the representation of where the sell orders began. Obviously, this high is where the sell orders began. So the breaker block is just telling you, hey, this is where the sellers began. The price should come here, tap this area before shooting on higher. And I say, remember, price does not have to stop exactly at the breaker block before creating a new structure high. This is just a potential area. Price can still drive lower and stay within the bullish structures range before creating a new structure high, meaning price can still come down here, maintain structure before going on higher. So this is just a potential area price can stop at before going lower, and this is why I classify this as a continuation order block. The only difference is when I draw my continuation order blocks, I am drawing from this continuation leg from here to here. I'm not drawing from here out. I am drawing from here to here, not here. This is why I say it's a little bit more advanced, but you may see that out in the real world. Does that make sense so far?
Yeah, I have a question though. What is the difference from this and an inverse fair value gap? Fair value gap is like the same thing, right? Just an order block.
So explain an inverse fair value gap, because I think you said that yesterday. I'm not even sure
Yes.
exactly what an inverse, or is it? Oh, go ahead. Go ahead.
So it's pretty much just this, just the as a fair value gap. Or in the video, it explains it better.
In the video you sent.
You want to pull it up? Yeah.
In this video, I'm going to show you a simple ICT trick that'll help you avoid losses. So looking at this, you can see we swept out buy-side liquidity, correct? What are we looking for? Market structure shift. Now we wait for a fair value gap. Okay, so notice what price does as we get into this fair value gap. We disrespect the fair value gap. And this is the protected high because this has already swept out buy-side liquidity. This should not be ran out. And as you can see, we break that high. This has shown you that we're no longer selling the market, okay? Smart money and the big institutions have come in and said, no, we're buying this market up. We don't want to sell. So we're going to be using this inverse fair value gap to position ourselves into the market on the long side.
I see. So I've never done that before. Once again, a fair value gap is meant to rebalance the market. So once it's rebalanced, it doesn't have a use anymore. You just keep dragging it out. Doesn't make any logical sense to me to do that. And ultimately, no, I can't draw it, but let me see if I can snip it for you guys. This from here down,
Can't see.
thanks. This from here down is an order block. So by this inverse fair value gap, which I've honestly never even heard of before, you are taking a trade off of a order block to go higher because this is the sell to buy. You see that?
Yeah. Yeah.
So that's the way I see it. I wouldn't keep dragging fair value gaps across candlesticks like that. It doesn't make any sense to me. It's meant to rebalance the market. So once it's rebalanced, meaning it's filled, it has no use for it anymore.
Yeah. So order block, it can be hit twice.
Yes.
Okay.
Position ourselves into the market on the long side.
So with this breaker block, honestly, all it is you marking up this sell to buy. So this is the order block. But instead of marking up the entire order block, you're only marking up the top of it. And you're pretty much missing out on all this.
So that would be an extreme breaker order block, or that's just like what they call it.
Say that again one more time.
So breaker blocks are pretty much an extreme breaker order block.
To me, it's a continuation. My extreme has to cover this low. If it isn't covering this low, it's a continuation. Does that make sense? Because when I draw an extreme order block like this, you agree this is an extreme, right?
Yeah.
This extreme covers this low. This is the furthest point price can go before going on higher. So this breaker block, is this the furthest price point or furthest point in price could go while still maintaining bullish structure, or can it go lower?
It can go lower.
Correct. So therefore, it is not an extreme order block to me.
Yeah.
So breaker blocks are classified as continuation order blocks, and that's why I say up in the front. Another representation of continuation order blocks. They are not needed, but if you do use them, just know that they are part of the continuation order block family. Make sense?
Yeah.
So in this bearish structure, bearish breakup structure, this is a buy to sell, which is an order block. All a breaker block is doing is showing the very beginning of that buy to sell, meaning instead of marking up this entire order block, it's only marking up here. And since this is not a representation of the furthest point in price can go while still maintaining bearish structure, remember this is a high to a low, price could go past it, disrespect it, and then go lower. This is what classifies this as a continuation order block to me. An extreme will cover this high. A continuation won't. And the reason why breaker blocks are, why people use breaker blocks is because they understand that the banks bought or they sold. So this is an area that they know the banks bought, meaning they have to mitigate those buy orders, meaning price should come in here, close those buy orders, and then drop. But when you use that, you have to really understand that, hey, price could still go past it and then drop. So therefore, it is still a continuation order block for me. Make sense?
Yeah. Yeah, I get it.
Okay. And same thing here, bearish break of structure, low to high. This breaker block is a representation of where the banks bought, where they sold, but they're not taking consideration of the entire buy move, just the beginning. That's why it is a continuation that could play out, but it also could disrespect it and then go lower while still maintaining the bearish bias. Same thing here, last area they sold before they bought, which caused the break of structure. This is the last area in which they sold. So this could be an area that price simply taps into, mitigates those sell positions, and then drives higher. But it is a continuation order block because price could disrespect it, still maintain maintain this low to high because it's bullish now and then go on higher. Accumulation, this is the area they sold or they bought. So this area is the beginning of them selling, which is that potential breaker block before buying on higher. But it could be disrespected, still maintain this low to high and still go higher. Distribution, exact same thing, just flipped. Last area they bought, they sold. So this area is where they began to buy and could be an area where they mitigate and then drop. It doesn't have to come all the way up here and then drop. Make sense?
Yeah.
And pretty much here in these illustrations, I might have been able to pull this up a little bit sooner. All it is that sell to buy order block. This is just a representation of where they first began to sell. So these arrows are showing where they began to sell, where they began to buy, where they began to buy. So instead of marking up the entire order block, that entire buy to sell is just a representation of the beginning of where they began to buy before they sold. So that might help it a little bit too. So yeah, those are breaker blocks. Personally, me, I don't ever really use breaker blocks. I should also add in this section, the only time I may use a breaker block is when it aligns with my continuation order block. And even then, I probably would just continue using the continuation order block. And what I mean by that is if price is in bullish structure, this is that breaker block, right?
Yeah.
That's a breaker block. You backtrack one real quick. You understand that's a breaker block?
Yeah.
Now, this is still a breaker block, right?
Yeah.
Isn't this also a continuation order block here?
Yeah.
And then it's also in discount. I did not show that it sweeps sell side liquidity, so I should add that as well. But right now, let's imagine that it does sweep sell side liquidity. Can you see how this continuation order block is pretty much in the same area as the breaker block?
Yeah, I see that.
So me, this is pretty much the only time I will use a breaker block is when it aligns with my continuation order block. And even then, I'll just draw it like this. But I'll also understand that, hey, this is a breaker block within the continuation order block. But I do think it's important to teach you guys what breaker blocks are, because when you're out there looking at different charts and things like that, you will probably see this where they have that breaker block pretty much. Make sense?
So if it doesn't align with your continuation order block, you wouldn't
No.
even draw
I
it?
put my continuation order block over the breaker block. But remember, a breaker block is a form of continuation order block.
Yeah.
So, for example, if I have breaker block here, how do I draw this? My structure is bullish. This will be my extreme down here. This will be my continuation order block. I like this continuation order block because it's in discount. It also sweeps sell side liquidity. So these are my two POIs. Would I use this breaker block as a POI? No. One, because I already have my continuation order block down here. And also two, it's not even in discount. But even if it was in discount, I would still prioritize this one over this one. So even if price was like this really extended out and now this breaker block is in discount, but I still use that? No, I would only use this one down here. Now, if price did this, let's imagine that's not there. This breaker block also aligns with this continuation order block and it's within discount. Then ultimately, I'm still using my continuation order block, but I also understand that, hey, it's also within the breaker block. Does that make sense?
What if there is no continuation order block? It's just a breaker block.
Then I wouldn't use it. You
Just
can
wouldn't.
keep it in mind because like you said, there may not be one, meaning prices like this, I only have an extreme, right?
Yeah.
Where's my continuation? Most of the time, there will always be a continuation somewhere within here. You can still do this and look for buys here, especially if it's in discount. But ultimately, what I would honestly do is I would have, since I don't have a continuation, I would just realize that, hey, this entire move is a sell to buy and maybe look for some confirmation buys within here. But just to take a buy because it's a breaker block, I personally need confirmations to take a buy. Because even though continuation order blocks are like second up to extremes, I would honestly say a breaker block, even though it is part of the continuation order block family that I've rated, they are not as high probability setups when you take them blindly, of course, compared to the order blocks, the continuation order blocks that I have set up for you guys, the ones that are under discount or in discount, the ones that sweep sell side liquidity. Typically, these breaker blocks by themselves don't work out. Yes, there are times they do, but I would not take a trade just solely because it's a breaker block. Does that make sense?
Yeah.
Because a lot of times price just does this and then goes on up. Or a lot of times there will be a continuation order block down here where price sweeps liquidity and then goes on up. So I take a buy at the breaker block, but then it just comes down here, takes me out, and then goes on up. So that's why I say ultimately you don't need to know breaker blocks to trade. It's just a concept that I want to teach you guys so you guys understand it in case you guys see it out there. And also you may be able to implement it if you want to, if it works for you, cool. But the way I implement a breaker block is it has to align with the continuation order block rules that I gave you. What's in discount, in this case it's more equilibrium, but it's in discount, it sweeps sell side liquidity. And if it just so happens to align with the breaker block, I'm okay with that. But I will not just take a breaker block because it's a breaker block.
Yeah.
So to wrap up, breaker blocks, they are part of the continuation order block. All it really is marking up that whole sell to buy, but it's a representation of, actually let me rephrase that because I don't want to confuse you guys. In bullish structure, you have a entire sell to move buy. All the breaker block is the starting point in which they sold before they bought. Instead of marking up the entire order block, you're only marking up the start of it, which is up here. And remember, if this is confusing, it is not needed. You do not need to use this. I'm just teaching it because it is well known within the SMC community. So I'm pretty sure you will see it at some point in time. I'm pretty sure even ICT uses it. So it's good to know about it. But ultimately, I will not use a breaker block by itself. If it aligns with my rules of continuation order blocks, then sure, it works out for me. But to just take a breaker block by itself, I do not like that. In bearish structure, this whole move is the buy to sell. The breaker block is a representation of where they began to buy before they sold. Instead of marking up the entire entire order block from here to here. It is just marking up the start. Once again, not needed, but it is there for educational purposes. Make sense?
Yeah.